Hi.
Hello, Jack and Marcy making a socially distanced video on what a mezzanine loan is. How you doing today, Marcy?
I'm doing very well, thank you.
This is
we just thought we would reach out and give out everyone information on what is a second mortgage, a mezzanine loan. There's a lot of different terms for it.
And we thought a good place to do it would be a park bench.
Yes,
I think that's
outside.
Yeah, it's more
Enjoying
impactful.
Florida's
No, actually,
summer weather.
because of the uptick in the
COVID.
Omicron, we decided rather than we have masks, so I don't get in trouble by my wife or my son. Marcy has a mask, but we decided to make it outside to be a little more social distance. Anyway, a lot of people ask, and there's a lot of confusion, what mezzanine loans are. So we wanted to make this video, not so much as a commercial for us, a little bit of a commercial for us,
but to educate.
Yes. On what a mezzanine loan is. So a mezzanine loan is commonly, and I'm going to talk in real estate. It has a slightly different meaning for business loans, non-real estate. But a mezzanine loan in real estate is subordinate to the first mortgage. So it's behind the first mortgage. It's subordinate. Yes, it's subordinate to the first mortgage. Technically, it can be a subordinate to the first and second, but it's a subordinate debt, but ahead of equity. So if you picture, you have a property, the first out is the first mortgage. Then it would be a mezzanine, which is generally a secured mortgage on the property. Usually there's an intercreditor agreement, which is an agreement between the mezzanine lender and the first mortgage. So Gelt Financial acts as a mezzanine lender. So we have what's called an intercreditor agreement with the first mortgage, which we negotiate, which talks about what happens if something goes wrong and who has what rights and who can do what and all of this stuff. As well, it's usually secured by UCCs in the LLC. So that's generally a mezzanine. It's all, to my knowledge, it's pretty much always recorded again in cases of real estate. But it's subordinate to the equity. So on the capital stack, you have the mezzanine, the first mortgage debt, the mezzanine, and then the equity. So that's the order of.
What's the total equity combined that we can do, Jack?
You mean the loan to value?
Yes. What's the loan to value? Like if we take the first and then we take a second, if someone comes to us, what's the total loan to value that we'll do?
Well, it's a good question, and I don't mean to be evasive, but it really all depends on the quality of the tenant and the real estate.
Okay. So if it's a long-term tenant, triple net, or anything like that, it would be a higher loan to value?
That's correct.
Okay.
So if you have, and generally we're doing these on multi-tenanted businesses or credit tenant businesses. Gelt Financial isn't doing them on, for example, a fix and flip. Okay. So give you an example. We just closed the deal, I'm losing the track of my days, 3-4 days ago. It was on 3 credit tenant restaurants. It was an Arby's. I forget the other ones.
Bushes and Captain D's.
Marcy knows this stuff. In 3 different states, but they were long-term leases, very stable. So we would go
triple net.
So we would go higher.
Right.
We also did one, I'm going to say a month or 2 months ago, on like a 70,000 square foot office building in Texas. So generally they're done on more secure properties, and the more secure, the higher the leverage will go. Okay. And leverage is kind of an interesting question because we did, Marcy, the deal in Vineland, New Jersey last year. We went up to 100% on that of the purchase price because we thought the value was much higher. Okay. So leverage is a funny thing, but self-understood mezzanine is usually higher than first mortgage debt. We'll go 70, 75, 80 generally, sometimes higher, sometimes lower. It just all depends on the situation. But it's an excellent tool in the tool chest for a real estate investor. Again, it's not for everyone, but for a real estate investor.
It all depends on the properties.
All depends on the property, and the payments can be structured with a lot of flexibility. So, for example,
as all our deals are, we structure them all different depending on the situation.
Hi, Nancy. We're making a socially distanced video out here. We're not having a lover's quarrel, I promise. People are walking by the thing. What are these 2 people doing out here? Anyway, so give you an example. The deal we did in Texas, if I remember it correct, the payment was lower the first 6 months, and then it went higher because he needed to put a tenant in to stabilize the property. So there's a lot of flexibility, but I think we gave them, did we give them a good idea what a mezzanine loan is?
I think so. I think everyone understands. I mean, when you hear the word mezzanine, and then again, it's really a second mortgage. to try to, if anyone's looking to understand what it is, but it all depends on the property, the collateral, and how much equity is in the collateral.
So now you know what a mezzanine loan is. If you have any questions, leave the questions. We monitor this YouTube and TikTok. We'll answer them. If you want to get more information from us, like our videos and hit the bell or buzzer so you're notified, like the channel. You can always call us at 561-221-0900.
Extension 103.
103, and check us out at geltfinancial.com. And most important, stay safe and have a fantastic day.
Take
Thank
care.
you.